Hello and welcome back. Today we are going to take a look at the Tesla Yield Shares Purpose ETF. The ticker symbol is YTSL, and this ETF is my biggest holding right now, almost 40% of my total portfolio. The reason for that is because this is one of those ETFs that provides you a mix of growth and income. And at the same time, you can also expect your income to grow as time passes by because the underlying holding Tesla is a growth stock. And if the predictions are true, over the next 5 to 10 years, Tesla could very well double or triple in value. And this it will mean that this ETF also grows along with it. I'd already partially covered this ETF in my review of TSLY, which is the Yieldmax Tesla Option Income Strategy ETF. You can check out that video if you haven't already seen it. But in this video, I'm going to do a more in depth analysis of how this ETF works, what I expect from it, and the reason why it is my biggest holdings. So let's get started. All right. So, first, let us just understand how this ETF functions. The very first thing we can notice here is that this ETF actually holds Tesla shares. Unlike the TSLY ETF from Yieldmax, which uses a synthetic strategy to generate income from Tesla's price movement without actually holding Tesla shares. But that's not the case with YTSL. But it gets even better because YTSL also uses a 25% leverage. What this means is that when you buy this ETF, it is like buying 125% of Tesla. And then they generate income by writing covered call on 50% of the holding. So on the 50% they write covered call, the remaining 75% is left to grow organically and you receive the complete upside from that. So this is a really good mix of both growth and income from a stock like Tesla, which is a high growth company and also highly volatile. So you're really getting the best of both worlds with this ETF. But it gets even better when we look at its distribution history. Now, this ETF has been in the market for more than a year, and if you look at its distributions, you will find that they have all been very consistent. Look at the amount 0.3067 every month per share, and it has been that way since 2022. So, if we look at the tax factor for 2022, it was the same distribution and it remained consistent until July of 2023. And from August onwards, they increased the dividend to 35 cents per share every month. If you compare this with distributions from Yieldmax TSLY, you will find that their distributions are all over the place. And this is not exactly a bad thing because they're certainly paying out a higher dividend overall. And they clearly have a very different fund structure compared to YTSL. But I just wanted to highlight that point because if you are someone who is looking for more consistent dividend income, then YTSL might just be a better option for you. Also, YTSL has been able to increase its dividend because throughout 2023, Tesla's stock has been on fire. As you can see, year to date, Tesla stock has returned 143%. What this means is that if Tesla stock continues to grow in the future, we can expect similar dividend increases in the future as well. And that also means that you might end up getting an outsized income for the current share price if you were to buy the YTSL ETF today. So let's do a simple example here. Let's say you decide to buy the YTSL ETF at its current share price of $28.26. Now remember, it is paying out a monthly dividend of 35 cents. When we do the math, 35 cents multiplied by 12, we get $4.20 per year. And when we divide it by its current share price of 2826, we get an annual yield of 14.86%. But this is at its current share price. Now, Tesla is a growth company and it is expected to grow in the coming years. And we are going to do a very moderate estimate. So let's say Tesla doubles over the next 5 years. And since we are getting about 75% of the actual stock capital gain on this ETF, this stock gains 75%. So we multiply it by 1.75. So let's say the ETF stock price goes up to 49.45. And let's assume that the fund managers try to maintain the 14% yield over that time. So if we do the math, 5 years from now, if the stock does double, like the Tesla stock does double, and the fund grows around 75% of what Tesla increases by, we would receive an annual dividend of 6.92. When we divide it by 12, we would receive a 57 cents dividend. Now that would be 14% of the increased price 5 years from now. But if you were to calculate that income on your purchase price, which is the current $28.26, and when we do that math, 5 years from now, you could be receiving a 24% income yield. And that for me is the most important advantage when it comes to the YTSL ETF. Because with TSLY from Yieldmax, I do not think there is any potential for dividend increases in the future. They're already paying out a pretty high income as it is. So we cannot really expect any increases in the future. If anything, I expect that there might end up being some capital erosion, and so they might end up reducing the income in the coming years. But with YTSL, because they have this mix of growth and income strategy, I think in future you could end up getting a higher yield. Also, Tesla is a very volatile stock, so even if we are looking at a 5 years range, you might end up and you might come across instances where you could buy Tesla shares at a very cheap price. A very good example of that would be just the fact that at the very start of the year, in 2023, around January and Feb, this ETF was actually trading around $12 to $14 range. So if you had bought it at that time, you would actually end up with a yield of almost 28% at its current payout. So those are all the main reasons why this ETF comprises almost 40% of my portfolio. As far as risks are concerned, I do not see any particular risk with this ETF itself. However, the one most obvious risk is the Tesla stock itself. So we know Tesla is quite a volatile company when it comes to its stock price, but there are also several risks associated with the fact that it may not end up living up to the hype that we are seeing in the market. It is possible that it could actually go down. And if Tesla does end up going down in the next few years, that means this ETF would also go down. And the income that is paying out right now may also be less in the next few years if the Tesla stock goes down. So that is certainly a risk which we are taking on if we are investing in this ETF. In my case, I'm okay with that. But if you're planning to invest in this, you need to first do some thorough research on the Tesla stock itself, because that is the holding which is going to make or break this ETF. So make sure to do your own research on the Tesla company before making any investment decisions. And obviously, you can do some research on the ETF as well, because I haven't covered all the nuances which you might find in the brochure of this ETF. With that said, I do want to end this video by also highlighting that TSLY is not a bad ETF, the TSLY from Yieldmax. I may have done some comparisons in this video which might make you think that this is a superior ETF, But I was mainly just highlighting this is different from TSLY from Yieldmax. Depending on what you're looking for, there could be advantages or disadvantages on either side. But for me, as far as my investment objectives are concerned, YTSL is certainly the better choice. But as I said, do your own research, look at your own investment objectives, and then make the best choice. Thanks for watching. See you in the next one.